and we'll also take a look at our charts that like we normally do, just the kind of usual suspects, which is the US dollar, NZ dollar, the S&P, and Bitcoin. So let's start there. So starting off with the dollar. Dollar's important to us because we consume a lot of stuff in US dollars and we are all earning New Zealand dollars. So we are trying to navigate this pretty complex situation right now when it comes to global kind of macroeconomics and also our dynamic that we have to deal with in terms of consumption of different products and dealing with the reserve currency. So you'll see that the dollar was getting weaker, and then we've seen it pick up a bit again in recent past. So pretty consistent with some of the tension that we're seeing globally. It does make sense, at least in the short term, to potentially have a stronger dollar if there's a lot of tension, a lot of volatility and uncertainty. So that is consistent with, I guess, some of the craziness that we're seeing going on in the world at the moment. Consistent with that too is Bitcoin, right? So Bitcoin reached its high in October and has traded very poorly since, as you'll see here. And, you know, relatively consistently with when we're starting to see more uncertainty, this issues we're having with Iran, etc. Bitcoin price has picked up, and again, if this truly is a an escape from the dollar trade to many in many respects, then it kind of makes sense. Of course, we are also seeing a lot of information about the liquidity picture in terms of more stimulus and more money printing, which is also, I guess, consistent with a better trading dynamic for Bitcoin. So, you know, time will tell. It definitely seems like obviously it's trading better since we've seen volatility. So, what does that mean if things get less volatile, and also does this strength continue if there was increased volatility? So, pondering a few questions there. And then just finishing off, S&P again from the start of the year has kind of chopped around and consolidated while we've dealt with some volatility in the headlines. So kind of not much to report on here, I think, of interest other than, it's actually kind of, you look at the price action here, it's not crazy considering some of the stuff we're hearing in the headlines. So let's move into the kind of some last week and some of the kind of headlines. We had the Federal Reserve under attack, so we now have, I believe the DOJ has issued a criminal investigation against US Fed Chair Powell. It's definitely perceived in the market as antagonistic and an abuse of power in many respects. And when the news broke, the market did not like it. However, like we just saw in the previous chart, prices remain, at least at an index level, relatively subdued and not too volatile. Trying some generation here with Google presentation, and it's not too bad. I think the AI is okay. It's making a lot of changes to your product, to your design, when I don't really want it to, but I've been kind of experimenting with some of the slide generation after putting in my own content, and it's pretty saving me some time, that's for sure. So one of the points that we should note is, of course, the small and mid cap outperformance in the new year over the first couple of weeks, especially. That outperformance 11-day streak I saw on Perplexity, outperforming the S&P, longest streak since 2008. I don't know if that bodes well or poorly for us, but I do have some charts actually. So I have a comparison chart here of the Dow Jones, ARK, the S&P, the IWM, which is the Russell 2000, and the TLT, which is the long duration treasury, so 20-year plus. Since over the last month, they're all up apart from ARK, which is slightly down. I thought ARK was interesting in relation to the small and mid cap outperformance because, you could say that ARK and some of the holdings are also representing some of that small to mid cap space and this kind of high beta speculative trade of companies that are kind of very much still unproven, perhaps. So there is a difference between the construction of ARK and the IWM, and you can see that in the performance. And then I think it's interesting to look at the S&P and the Dow Jones versus the Russell 2000, which in an ETF context, there's the IWM as an example. So really strong outperformance over the last month. 3.83% outperformance against the SPY there. So that is significant. What does this tell us? I guess we have to ask questions around what is making the market see a rotation into these more traditional businesses and other kind of companies. There's, I believe, a little bit more representation of healthcare and energy in the mid-cap space, so that could be a contributor. But, one thing I've seen from commentary of professionals in the market at the moment is the conversation around, is energy connected to AI, therefore I need to allocate there because that's the next part of AI. So I do think a lot of commentators are saying a lot of adjacent industries and then adding AI and giving justification for the improvements to the businesses based on, I guess, the increased productivity we're seeing through the adoption of different compute systems, really. I mean, we're calling it AI, but it's really just offloading human time with compute. So, it's all AI, really, right? Apparently. It's all really compute, actually. And then just looking at just how the bonds are acting. So, yeah, strongest performer, as per the slide as well, is the IWM. Is that a bit of a speculation and a small door that a bunch of people are trying to rotate into, or are those prices enduring, and will we see continued outperformance? I think that's the next question. So on to the next slide. This slide is again from Acuity, a comparison slide of a bunch of the banks that reported last week. I believe they've all reported now, and you can see their performance over the last month and how it's diverged at the end. There's a really great video from Steve Eisman on this. I will work out how to link that perhaps, but he did a pretty big piece on YouTube on the banks and the bank earnings and how the bank earnings work. I think it was a pretty sensible piece of content, and it really gives you a good idea of what's going on and how that relates to price. So essentially, if you look here, you see Bank of America and Wells Fargo down over the last month. You see Citibank even, JP Morgan's down, and then you've got Goldman Sachs and Morgan Stanley up. Now, Goldman Sachs and Morgan Stanley are do a lot of investment banking and private wealth management. Assets broadly are doing quite well. There's lots of mergers and acquisitions in the works, and the IPO calendar's meh. But it kind of this kind of performance here, you can see outperformance of investment banking and wealth management versus retail banking, which is doing more poorly, and that's where Bank of America and Wells Fargo are more exposed. So it kind of makes a lot of sense. JP Morgan has a hybrid approach, hasn't performed as well as Goldman Sachs and Morgan Stanley over that recent past, and they've been killing it over the last year. And then Citibank, even. Now, what Eisman did talk about was he's talked about on a relative basis, we are looking at kind of the most expensive banking valuations we've seen in a very long time. So I think that's really important to note. Greenland escalation. So this is probably something that not a lot of people suspected pre-election, which was kind of overt aggression against allies from the Trump administration to secure key geographic locations, and in this case, it's Greenland. Um, yeah, I mean, we're obviously kind of it's moving quickly, and there's pretty outrageous things being talked about, like military action, etc., etc., and that no matter what happens, the U.S. position is that they get Greenland right now. Um, this is pretty unheard of, but a lot of what Trump has said, the administration has acted on, so you really can't take this too lightly. And then obviously as a attempt to put pressure on Europe, Trump is talking about potential tariff increases. So that's how they're pushing their weight around. It's not great for markets. It's definitely not ideal for humanity, probably, but we'll see. I want to talk about a pretty important topic as well, which relates to markets, but also is very important when it comes to just like business, productivity, etc. And I think it's something that is often underappreciated or misunderstood, which is that so much code gets written, but very little code actually gets used. And code that is written and then not used or worked on and nurtured eventually, well, very quickly becomes useless. So we're obviously seeing a lot of vibe coding now and a broadening of access to compute and building compute systems. Yeah, more people have accessibility to do it, but we are still seeing a large skill gap when it comes to actually getting things deployed and then getting people using them. And that's the real difference that we're going to see in the market. We have the opportunity for more code to be written, but the real question is how much of that code and how much of those systems actually ever get deployed. And when we're talking and thinking about the build out of AI systems and compute and data centers, when we're thinking about future revenue growth for these hyperscalers, etc., we need to think about what's the sustained generation of code, what's that increase, and which of that code is ever utilized and then therefore monetized by the hyperscalers in the form of hosting. So I think this is a really important topic. I think that if your business wants to get the most out of these new systems and compute in general, you need to have the expertise and the ability in-house to deploy these systems and use them and get an increased, productivity out of it. So yeah, lots more to come there. The systems are getting better. I'm sure that I'll be talking about different systems and techniques that are being launched into the market that businesses are utilizing, public market companies that are, adopting new systems, and ultimately what is the moat of SaaS companies. We have seen SaaS companies, so if we went to, like a CRM, Adobe and such, if I was quickly to open up my website here and just what else have we got? Dropbox, Workday, SAP. That's a pretty good mix. Let's get that one, and let's just check the performance over the last year. You'd see that all of them are down heavily. With Salesforce and Adobe down both over 30% respectively. This is the market saying that those moats are now impaired and that they will have their businesses affected and their valuations are ultimately being challenged based on the expectation of the democratization of compute and essentially intelligence through AI systems. Like I mentioned prior, I'm going to move my head. Can I do that? No. Okay. Well, the end of the chart looks really bad for this. How do I see? It's down here. I know that doesn't show very well on my screen, but anyway, uh, the market here is going and saying, hey, these businesses are not going to be as sticky. Larger companies that use them are going to try to build their own systems that are much more cost effective, and yeah, ultimately the subscriber base is here, and the growth rates are going to be changing. Now, if the depression and the expectation of AI is going to solve everything gets too much, I think there's going to be a lot of value in the software space. My take on it is that the convenience and the maintenance of the systems is going to be done much better by companies that are dedicated to a specific system. So it is going to be an advantage in the market, but it really depends on the capabilities of these companies and individuals building these more decentralized systems. So it'll be interesting to see how the next year progresses, and how much the skill gap, I guess, between building something that looks okay and deployment, how much that skill gap actually decreases over the next 12 months. But anyway, as always, we hope you have a great week, and none of the content in this podcast is, of course, a financial recommendation. It's only for educational and entertainment purposes only, as always. And we will see you next Monday with the